Happy new tax year! The start of the new tax year is the perfect opportunity to spring clean your finances. Here are a few tax year updates from the Clearcut team to help you get to grips with your tax allowances and thresholds. There have been some big changes to some of the tax allowances this year, so stay tuned.
The personal allowance remains at £12,570. This is the amount of income you can earn without paying income tax. You can also transfer up to 10% of your personal allowance to a spouse if you have unused personal allowance and they are a basic rate taxpayer. The basic rate band is stuck at £37,700. From the 6th of April 2023, you will start paying 45% additional rate income tax on earnings over £125,140. This has been reduced from £150,000. Savings allowance is £1,000 for basic rate taxpayers, £500 for higher rate taxpayers, and additional rate taxpayers don't have a savings allowance. You'll have to pay income tax on any interest earned over these thresholds. The capital gains tax allowance has halved to £6,000. The dividends allowance is also halved from £2,000 to £1,000. Tax payable on dividends has also changed. Basic rate taxpayers will now pay 8.75%, higher rate taxpayers will pay 33.75%, and additional rate taxpayers will pay 39.35%.
Know your ISAs. ISAs are a tax-efficient way to save money. You don't pay any tax on income and gains made within an ISA wrapper. The ISA allowance is £20,000 per year, meaning you can save £20,000 into either a stocks and shares ISA or a cash ISA. You can open one type of ISA in each tax year. There are also junior ISAs. Junior ISA allowance is £9,000 per child. This is a tax-efficient way to save for children or grandchildren. Once they turn 18, the money is theirs, but they can't access it before this time. There are also lifetime ISAs. The lifetime ISA allowance is £4,000 net. If you're saving for a house or retirement and aged between 18 and 39, you'll get 25% government bonus on contributions up to £4,000. This means you can earn up to an extra £1,000 every tax year. If you're approaching age 40, make sure you open one, as you'll lose the ability to as soon as you reach your 40th birthday.
Okay, so you could pay into a pension. That could be a workplace pension or a personal pension. There's been a lot of changes happening this year with the budget. Some interesting stuff's happened around pensions, which basically increased how much you could pay into a pension each year. So now the limit's going up to 60,000 a year. It was previously 40,000, provided you've got earnings of that level in the year that you make the contribution. And even if you don't have any earnings, you could make a contribution of up to 3,600 with no earnings. You would get tax relief on all pension contributions. So if we look at the 3,600, all you need to do is put 2,880 into a pension and 3,600 goes in there. What happens then at that point is once you've made that contribution, the government will give you the tax back. So if you're a basic rate taxpayer, you get 20% put back in. If you're to be an additional rate taxpayer or a higher rate taxpayer, you'd get 20-25% back. And also, there's no lifetime allowance anymore, so there's no cap on how much you can put into pensions. So it's a great way to increase your savings, get tax relief from the government, and do a really good job for yourself in terms of making the right savings at the right time.
Check your state pension forecast. There are transitional rules in play at the moment, so you can top up your national insurance contributions and increase your state pension entitlement. The full state pension in 2023 could give an individual £10,600 per annum in income, which is protected by the triple lock. You'll need 35 qualifying years to receive the full state pension, and if you have any gaps, it may be worth filling them. At the moment, you can go back to 2006 to fill in any gaps in your national insurance record, but this opportunity ends on the 31st of July this year. After the 31st of July, you'll only be able to go back 6 tax years. There are a few considerations, so make sure you speak to us first before making the contribution.
Not much has changed with inheritance tax. As a reminder, each individual has an inheritance tax threshold of £325,000. If you've got direct descendants such as children and own your own house, you also have a residence nil rate band of £175,000. That totals £500,000 per person, or £1 million, combined nil rate band for a married couple. You'll start to lose the residential nil rate band if your estate exceeds £2 million. If your estate's over these allowances in total, you'll pay inheritance tax on this amount at 40%. You can also give away £3,000 of your capital this tax year, and the same for last year if you didn't do so at the time, to help with gifting and reducing your estate value. There are also other inheritance tax exemptions that you can use. If you want to know more about inheritance tax or planning in this area, please get in touch with a member of our team.
So don't worry if you haven't written everything down. We'll be covering all this in your annual review meetings. If you have got any burning questions in the meantime, please do get in touch with one of the team. Have a wonderful Easter weekend, and once again, Happy New Tax Year.